Retirement is not the end, but a new chapter full of opportunities and moments to cherish. You ever throw money in the trash? Not literally, I mean figuratively. Money that belonged to you, sitting right there, and you just tossed it because you didn't see it or figured you'd handle it next year. I'm George Markham, 79 years old, been filing tax returns since 1963. That's 63 years. Right now, something's happening that most of you don't know about. Between now and the end of 2028, there's a door open, a tax door. We're already in 2026, which means roughly 2 years left to walk through it. I guarantee most of you will miss it because taxes sound boring or like someone else's responsibility. They're not someone else's responsibility. They're your dollars. My grandfather, Thomas Markham, arrived in Baltimore in 1932 with $17 and a toolbox from Wales. He worked construction dawn to dusk, fixed plumbing on weekends, saved every nickel. He used to tell me, "Georgie boy, the tax man always gets his cut." Always. And he was right. But Thomas also taught me you pay what's fair. Not more, not less. That's not dodging. That's common sense. So when I tell you there's a tax change that could save you serious money over the next 2 years, listen up.
This isn't some shady loophole. This is Uncle Sam literally saying, here's a break, use it.
Here's what happened. The new tax law made the lower brackets permanent. Everyone thought the 2017 cuts would vanish at the end of 2025. Higher tax bills for almost everybody. Not anymore. Those rates are locked in. But here's what matters if you're retired or close to it. The standard deduction got way bigger if you're over 65. For 2026, married filing together gets $32,000. Single filers get $16,000. Over 65, you get an extra bump. $1,600 per spouse if married, $2,000 if single. So a married couple, both over 65, their standard deduction is $35,200. That means over 35 grand of your income doesn't get touched by federal taxes at all. And we're not even to the best part yet. When I was 36, my wife Linda got cancer. She fought it for 18 months. I was running the hardware store, taking care of 2 teenagers, sitting in hospital rooms at midnight. For years, I thought money was just survival. You earn it so the lights stay on. You save it so your kids get through college. But later, I learned something else. Money is also freedom. Every dollar you keep instead of overpaying taxes, that's freedom you're buying. Freedom to see your grandkids more. Freedom to take that fishing trip you keep postponing. So when I tell you to pay attention to this tax stuff, I'm not saying be cheap. I'm saying be smart. The time you have left matters more than any bank balance. Now here's the part that's only good through the end of 2028. Starting last year, there's something called the Senior Advantage Deduction. $6,000 per person over 65, married and both qualify. That's 12 grand extra. And it stacks on top of everything else. So that 35,200 standard deduction I mentioned, add 12,000 to it. A retired married couple, both over 65, has an effective standard deduction of over $47,000 in 2026. $47,000 of income federally tax-free. If your adjusted gross income is $90,000, only about $43,000 is actually taxable. But here's the catch. This Senior Advantage deduction expires at the end of 2028. Less than 3 years from now, it's gone. Nobody knows if Congress brings it back. Whatever you're planning to do with this opportunity, You've got 2 years and change left. I made a mistake back in 1997. Sold a rental property, had owned it for 15 years, nice profit. My accountant, Barbara Chin, told me there were ways to handle that sale that would cut my taxes way down. Do a 1031 exchange, roll it into another property, spread the gain out properly. I said, Barbara, I don't have time for complicated stuff. Just sell it and be done. I paid taxes on the whole gain at once. Lost probably $15,000 I didn't need to lose. 15 grand because I was impatient, because I figured I'd deal with tax strategy some other year. Don't be me in 1997. Don't walk away from your own money because you're too busy or too confused. So, what should you actually do with these 2 years? First, if you've been considering Roth conversions, now's the time. A Roth conversion is taking money from a traditional IRA where you haven't paid taxes yet and moving it to a Roth IRA where it grows tax-free forever. With this bigger standard deduction and the Senior Advantage, you might convert a chunk while staying in a low bracket, maybe even paying zero federal tax. Second, if you've got investments in a regular account with gains you've never taken, this might be the time to harvest some of those gains. With the higher standard deduction, you might realize some gains while paying little or no taxes. You reset your cost basis, meaning less taxes down the road. Third, think about spreading your income over these 2 years. Lots of people wait until they're 73 to start pulling money from IRAs because that's when required minimum distributions start. But if you wait and then suddenly have to yank out big chunks, you might jump into a higher bracket. These next 2 years with the extra deductions might be smart for taking some money out early, voluntarily, at lower rates. One more thing about the Senior Advantage deduction: it phases out if your income gets too high. Single and your income tops 75,000, the bonus starts shrinking. Married filing jointly over 150,000, same deal. So if you're near those numbers, planning becomes critical. You might want to manage your income by timing withdrawals or managing when you claim Social Security to stay under those limits. This isn't something to figure out April 14th. Plan for this now. My second wife, Carol, handled our taxes for 30 years. Former bookkeeper, razor sharp with numbers. She used to say, George, the tax code is written by people looking out for themselves, but buried in there is help for regular folks too. You just got to dig for it. She dug every year, found deductions I would have missed, credits I didn't know existed, saved us thousands. Carol died 2 years ago. She'd want me telling you this. She'd want you to know the help is there. You just have to look. Here's your homework. Yes, homework. I'm 79. I've earned the right. This week, do 3 things. One, find out your standard deduction for 2026 based on your age and filing status. Write it down. Two, if you have retirement accounts, find out how much is in there and think about whether you want that money taxed now at these rates or later when who knows what rates will be and the bonus is gone. Three, if you have a tax advisor, call them this week. Tell them about this 2 year window. Ask what you should be doing different. If they don't know what you're talking about, maybe find someone who does. And if you don't have anyone, start learning. Everything's online now. I know taxes are dull, but you're still here. That means you care. That means you want to do better. This 2 year window is a gift, not flashy but real. The kind that can mean a few extra thousand in your pocket. The kind that can mean one more visit to see your grandkids. One more year of worrying a little less. Take the gift. Don't leave it sitting there like I did in 1997. Don't tell yourself you'll handle it later. Later has a habit of never showing up. You've got 2 years, rest of 2026, then 2027, and 2028. That's it. Then the door closes. Make them count. Thank you for watching this video. I'll see you in the next one.